Hello, I'm Alan Kemp, Executive Director of the Iowa League of Cities. Thank you for accessing the League's Property Tax Information and Resources webpage. In Part 3 of our Property Tax series, we take a look at the new multi-residential property class that was created during the 2013 legislative session. To begin, let's take a look at how multi-residential properties are defined. The definition is broad and includes mobile home parks, manufactured home communities, land-leased communities, assisted living facilities, property primarily used or intended for human habitation containing 3 or more separate living quarters, and finally, for buildings not classified as residential, the proportion of the building that is used or intended for human habitation, even if human habitation is not the primary use of the building. An example might be downtown second-story apartments. Eligible properties will be assessed for the first time in 2015, affecting fiscal year 2017 city budgets. Multi-residential properties will be subject to a separate rollback schedule for 8 years starting at 86.25% in fiscal year 2017. The rollback percentage will gradually decline and reach 63.75% in fiscal year 2023. In fiscal year 2024 and beyond, this multi-residential rollback will be equal to the residential rollback. You may recall from Part 2 of our series, cities will receive backfill funding for property tax reductions relating to the new commercial and industrial property rollback. There is no such backfill provision for the new multi-residential rollback. The impact of the multi-residential rollback will be proportional to the amount of such property in the city. The challenging aspect regarding multi-residential property is that some such properties have not been assessed before, making it difficult for cities to accurately estimate property tax revenue reductions. Despite the uncertainty, it is fair to assume that some cities could see significant loss in property tax revenue due to the 8-year rollback schedule. To prepare for the coming changes, cities are encouraged to work closely with their county assessor as a system for assessing multi-residential properties is developed. Identifying eligible properties and estimating property valuations will be vital when attempting to forecast future revenues and setting long-term budget plans. City officials will keep an additional eye on the residential rollback percentage since the multi-residential rollback will eventually equal that figure. The residential rollback has increased the last 6 years and is currently at a little over 54%. However, this percentage has typically declined and could again in coming years. As noted in Part 1 and 2 of this series, the League has developed a property tax model which gives you the ability to enter property tax valuations and see how the changes to your property tax system are projected to affect your budget. Unfortunately, the model does not currently calculate the impact relating to multi-residential because accurate valuations do not currently exist. As always, the League is here to help. Please do not hesitate to contact us with any questions or comments you may have. Thank you.